Hey everybody, happy Thursday. It is January 22nd, 2026. Thanks God for another day of life. Thank you, God, for waking us up this morning, giving us breath in our lungs, for renewing our souls and refreshing us. Help us to do your will, God. I'm here because of God. In Jesus' name, thank you for another day of life. I hope you all have a blessed day. Everybody, I hope things are going well in your life. If they're not, know that you can do all things with God, and that's the only reason I'm here. So let's get into it today. Today was a good day. I'm up on the day, green again. To be honest, if I'm looking back, I did make some impulsive emotional trades. Just woke up a little bit later, so felt like I was behind the curve. So, big lesson if you had to walk away with anything today is follow your routine in the morning, wake up early, give yourself time to breathe in the morning. Because today I just hopped in, and when you're waking up, you're not in the clearest, sharpest frame of mind, and it could have cost me a lot. So let's get into it. So trade of the day was XTP up 321. This was what I'm talking about. This was an opening bell breakout. So it was in this range right here, and it broke out immediately with the opening bell. So if I had gotten up earlier, I would have been able to capture this entire move. Rather, I got in actually at the end of the breakout. It could have easily crashed. It could have easily just gone down here, would have been left with nothing. Let's so I got in here. Reason I got in was because of FOMO of the breakout. So this is impulse breakout. There was no strategy. This was only FOMO. My risk reward was I was probably risking down like to the bottom of the breakout. My risk reward was 1. Reason for entry, FOMO, opening bell breakout. So it was an impulse breakout opening bell. FOMO is why I got in. What was my miss here? So this could have easily reversed. I bought here. I bought more on the way down, thinking that this was very strong. It could have easily reversed more. So I didn't wait for any signal. I wasn't ahead of the curve. Meaning it was planned. Meaning this wasn't planned. There was no take profit lined out. There was no stop lined out. No TP. No take profits. I scaled in on the way down, really to cover myself. There was no method. Um, this was all FOMO trade that I honestly got lucky on. It could have easily just reversed. The thing was already super extended on the day. Plus, it was extended. It was already very extended. So what I learned, wake up early and have a clear mind for trades. Actually, I want to do something real quick, which is just open up my trade journal for the day and report this. I'm really my big lessons for the day. Big lesson for the day: wake up early and have a clear mind for trades. Don't chase breakouts. Don't chase the opening bell breakouts. Catch them early, like a true hunter who waits for the kill. Do you know what the professionals did here? The professionals got in here, get in at the pullback to the breakout. So you see the opening bell, okay, look at what happened. It pulled back. If you got in here, this is a much better, just mathematically, much better risk reward. Say you got in right here, okay? Let's say you put your stop right here. Your risk reward is now at least 1.82 all the way up to 3. Really, all pullbacks catch pullbacks on the breakout. Catch breakouts on their pullback to the initial place they broke out of. This confirms if it was a real breakout. If you try to catch them at the top, it's not a sustainable. Catching them at the top is not a sustainable strategy. That's the biggest lesson for the day. Catch the breakouts on their pullback to the initial place they broke out of. Because I just over invested too much on this and got very emotional. So how do I prevent getting emotional? Wake up early. Give myself time in the morning. Don't feel like I'm trying to rush trades. Then once I'm there and I see, oh, we got opening bell breakout, catch the pullback, then get in. Okay? That's the big lesson of that one. Then, what time was this trade? This trade was, let's see, I want to track. Okay, this trade was 9:34, then 10:06. This was IOTR. So this was a swing trade. This was a deep pullback, no signals. No. I want to add. I'm gonna add a tag for momentum because I have two strategies that I'm trading. I'm trading momentum and I'm trading swing. So here, this was a swing trade. So I saw that this was coming down, 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 down. Is making new lows. I got in right here. No signal. It was extended from its level of support. It was I essentially bought at the top of the range. So my strategy here was deep pullback swing. Risk reward. My risk reward here was, essentially coming back here, what, 1.09. So not a good risk reward. Reason for entry. It was a deep pullback. It was a deep pullback with a lot of room on the upside. But what did I miss here? So if we're going to trade this strategy in the future, what you got to know is that signal candles, so tight stop is very important. In this case, I didn't have a tight stop. Like, I'm creating stops in my head with EMA, but EMA is not a valid stop for swing trade. That's not a valid stop. It's already below EMA. So like, it's going to reclaim EMA and then hold it? EMA is not a valid stop. Clear wicks on candles is a clear support level. So in this case, I have clear support right here, right? Right here, I have clear support. Right here. That's very clear support. I could have traded from there, but the importance of a swing trade, EMA clear wicks on the candle support level. So tight stop is super important for a swing trade because I'm essentially we are essentially trading against the trend in hopes of a reversal to the upside and a massive reversal all the way up to the top of the range. Okay, so what I'm expecting here in my head is I'm going to buy low here and it's going to go all the way back up. But there's a few things we need to consider, which is, okay, where can it actually go, right? So in the moment I was like, oh, this is going to go all the way up here. No, 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 no. First, it's got to pass through, it's got to stair step up. So this is the top, but consider the first, where can it actually go? Consider the next range up. And that means don't look at the high of day, which is up here. Look instead for the closest level of resistance. And use that as my risk, as my reward, and then plan my risk reward ratio from there. Okay? That's what we're doing. So no longer actionably, no longer am I using the high of day as my risk reward. I'm now looking for swing trades. I'm writing this down in another thing, but I'm going to talk it out with y'all. For swing trades, look at the closest level of resistance made by candles as my top of range to use in my risk reward calculation. Okay? Also, for swing trades, we error number 2. So risk reward was already off because I got in I didn't realize that I was getting in at the top of a range. Like, look, just look left, see what happens here. That's a big area of supply. For swing trades, look at the closest level of resistance. Also, start paying attention to how price action responded in the last few candles at the same level I'm at. What we want to see is that at the level I get in on, we have big green candles going up, not red candles going down. Because red candles going down, if I see in the past big red candles at that level I'm buying at, it means there is a lot of supply there. And I'm essentially trying to predict a breakout, which we know how that goes. Doesn't work. So just literally, like, if we're here, if I'm getting in right here, right, I need to look left. What happened here? What happened right here? Big red candle. I try to get in right at the top of this, where this happens. Nah, forget it. Bad move. And okay, so lastly, this is the most important thing. In the swing trade, the purpose of the swing trade is to buy low, sell high, okay? Buying very low. So for entries, I have to get in at a level of support. Must get in at a level of support at a low. If I miss it, it is no longer a swing trade, but it's a momentum trade that's trying to predict breakout. That's what it is. I'm no longer swing trading getting up here. I'm actually trying to predict the breakout. Down here is where it's okay to get in. Okay? I mean, look, like for the rest, it didn't go up. It actually continued to go down. So we get in here for a tap. We get in here, and then we put our stop right here. That's a better trade. We must get in at a level of support at a low. If I miss this, no longer swing trade, but it's a momentum trade trying to predict a breakout. Okay, so just big lesson here is just be very realistic with my with my range drawing to spot the true level of support and resistance. And I need to start having signal candles on the 5 minute. Again, and this is just textbook over and over again. Like something that I continue to not adhere to is having a signal candle in the 5 minute. Volume confirms my signal candle. I'm actually doing the opposite. I notice that I'm putting more emphasis on just volume. I mean, I didn't even look, this was increasing volume on the way down. Okay, and then low green volume can like there's no trade here. So again, I need a signal candle that is confirmed by volume to in order to get in. Like that's just textbook. Signal candle, volume anomaly, volume validation, get in. Here, I'm not getting like there's no system or strategy here. There's absolutely nothing here. That's how you lose $84. What's here? So 10 minutes, approximately 10 minutes after I just lost money, what happens? I make a bad trade. What am I doing here? This is a breakout. This is impulse. And there's this is a breakout impulse. There's nothing here. I was trying to predict a breakout on the 5 minute. It went up. I got FOMO. Strategy predicting breakout. My risk reward. Yeah, let's see that. How's the risk reward here? I mean, this is why breakouts suck because your risk reward is so bad. Look, that's the bottom of the range. So, in order to make money on this trade, bro, in order to have made money on this trade, I would need this to go up to um right here, all the way there. That's a joke. That's such a joke. Such a joke of a trade. In actuality, my risk reward was like zero point 0.1. Reason for entry, impulse, just lost money, revenge trading. What I miss here? So revenge trading will absolutely destroy my account if I continue to be on this, if I allow it. So what had happened here was I just lost $84. Why did I lose that? Because I tried to swing trade without mapping out my risk reward correctly. I tried to swing trade without a signal candle on the 5 minute. All I saw was that this was really low. That's nothing. I need signal candle validated by volume with a risk reward ratio mapped out. Didn't have that. So I lost $84. So for next time, we're going to get in at a level support at a low. If I miss it, it's no longer sweet trade, not going to get in and really be reasonable with my next layer of resistance that I'm reaching to. But let's say that happens and I still lose money. I got to put a 25-minute timer on in order to get in. Next, made $10. This was another attempt at a swing trade. that sucked because we have no signal candle. We've just all we've got is a level of support that I think is a level of support because of this. Okay, so that's like okay, maybe that's gonna hold up. It really didn't. There was no momentum, no movement. So this was a swing. Bro. This was a swing, deep pullback, no signal. This was a swing trade, deep pullback, no signal. My risk reward was, so I got in here. I was risking, my target was up there. So my risk reward was actually, let's put it right here. My risk reward was 6.45. So that's the great thing about the pullbacks is the risk reward is really high. Reason for entry, it's just making new lows. Other than that, what did I miss here? There's no real signal and confirmation on the 5 minute that would tell me this is a good trade. There's nothing there. There's no signal on the 5 minute. It's crazy. Like you need a signal candle on the 5 minute to make trades. Like next, I made $11. How? I got in, got out. Actually got in. So what strategy was this? This was a breakout. I seen that had just broken out, right, of this range. Actually broke out earlier. Look, again, breakout. This what happened? Well, this was earlier. Look at that. Breakout, pull back. That's why, bro. This is telling you again. Wait for that pullback to the breakout. So, and then it broke out again from here. It didn't even have the chance to pull back all the way. So, like, that's the win-win with waiting for the break for the pullback. Like, waiting for the pullback on a breakout is superior again and again. And I'll tell you why. Because it's a win-win, okay? So either you see that it failed and protected your money, or you see that it pulls back all the way and then you get in. At a much better risk reward, right? Like this is like okay, this is one that just it skyrocketed after. So you're getting in much lower, or you see that the momentum is so strong that it creates just like textbook pullback wicks to get in even more money on. Like this is a win-win-win. Either you see it failed and you protected your money, or you see that it pulled back all the way and you get in much better, or you see that the momentum is so strong that it creates what is here a textbook trade. That candle right here on decreasing volume this is like the most textbook type of trade we can get in on. And I got in right there. That's where I had my stop. This is 1 minute. Like on the 5 minute, we wouldn't notice that, but on the 1 minute, it's decreasing volume. This is why this pullback is so good. This is a textbook pullback where you really want to go in with a lot of money. First, we had increasing volume on the way up. So remove this. So this is a textbook pullback. So we had increasing volume on the breakout, and that's what we need. In order for a breakout to be successful, it has to be increasing in volume. B, we had decreasing volume on the pullback. see, we had a hammer doji created on low volume. Then you get in right there. Like, what's the risk reward on this? If you get in right there, whoa, probably risking that much. We're gonna get in right here, right at the top, right as it breaks through. Maybe a little bit before, like right there. And I did a little bit before. What do your risk reward to the top of the range is 0.81, but what we're looking for is a breakout. And you've just created a 3-to-1 risk reward right there. So why did I not capitalize on that? It went up, it went back down. As soon as I see that it got rejected, I exited everything, to be honest. But it didn't even, I took profits, I got out, I missed a big move. I don't know. This was a breakout pullback. I had a signal. Um, so this was a breakout pullback with a signal candle on the 1 minute. My risk reward was 0.81. My reason for entry was, like I said, all those reasons I just explained. Increasing volume on the breakout, decreasing volume on the pullback, hammer doji created on low volume. That was my reason for entry. What did I miss here? I got out way too quick. It's like I got cold feet, I got scared. This was fear. Um what am I gonna change next time? Um I mean, it's just a feel thing because when you see in momentum something try to make a new high and then immediately get crushed, it's a sign that it's gonna tank the other way. Like, this is just a play-by-play basis. I could have given it a little bit more time because it had such a strong textbook setup. So I would say, like, if I'm in on such a strong textbook pullback and it immediately reverses, give it just a bit more space to work. Just a little bit. Like, if I just waited like literally 2 seconds, I would have gotten that move up. Next made 242. Huge dub. This is great. We're getting in on a breakout. These are just the type of moves that we like. Again, this was a breakout. So I missed this move, right? This was from earlier. Could have gone in right here, take profit up here. You get out after 2 candles. Great. Okay. Could have gotten out right here. And then re-entered right here. Or just hold it throughout the whole way. With such strong momentum, on these moves, it may just be better to hold it throughout the process if I'm seeing red pullback doji candles. Could be. That's how you manage the trade. So we get up, get up, get up, decreasing volume, doji. This is just a textbook pullback on the 1 minute. So again, this is a breakout pullback with, again, a signal strategy, breakout pullback. What was my risk reward? I was getting, yeah. I got in right here. So come on, man. I was risking right below a little bit. So my risk reward was 1.17 for the top of that range, which I'll take. Plus a breakout, unlimited profit. So the reason for entry was this was just a textbook pullback with signal candle on the 1 minute. What I miss here, I got in here, took some profits on the way up, took more right here, it went down. I held. This was really good. So what I did good here that I like and I'm going to keep doing in the future is that if the breakout is super strong and the red candles on the pullback have very low volume plus doji structure, stay in the trade. Okay? Like map out the profits of course, but staying in this trade here made me way more money. And then I got out with a clear hammer doji. I didn't get that in here. So we didn't see clear hammer doji. We saw small red doji. We saw a hammer doji but on low volume. Here we see hammer doji on very high volume. So stay in the trade. If I see hammer doji plus highest volume or more volume than the actual move up itself, then get out fully. But I would be staying in here waiting for if I see doji candles or just small weak bear candles on the pullback. We stay in. We stay in with weak bear candles and doji bear candles. I'm only getting out after two, uh, two. I'm also getting out after one very strong, shooting star doji slash a bear trend candle. Like those two are telling me it's time to get out. Managed this trade very well. I'm very happy with how I managed this trade. Okay. Very happy. This was a great trade. Breakout pullback with the signal. Then I lost $87. Let's see how long was that. So I made some money on 1041 and then 1053. So 12 minutes after. 12 minutes after I got greedy. What was the strategy here? Breakout. No signal. I want to add a tag here. Breakout, no signal. This was impulse again. So this was a breakout, no signal. What was my risk reward here? I got in here. I was potentially going to the high of there, and my stop was right here. My risk reward was 1.32 after an already extended move up. Reason for entry, greed. What I miss here? Well, I missed the fact that we just had a shooting star doji right here on the highest volume. That's a clear signal to not trade it. So big key thing here I'm changing is after big wins, I'm taking a 20-minute break. I'm leaving the table. NAMM again. There was no strategy here. This was a greed move. None. What I miss here, it's the same thing. I'm revenge trading. That's how you lose $100 right there. Give back money. So big lessons here today is big lessons today is catch breakouts on their pullback. It's just such a superior move. Wake up and trade pre-market. Put in a 20-25 minute timer after big wins so you don't give money back immediately. And if we're going to trade swing trades, we need to be very realistic about our entry point and exit point. Use mapped out ranges clearly. Not shooting for the very top of the range because it created new ranges on the way down. All right, guys. Hope y'all learned something. Bye.